The interest rate that banks are paying on savings accounts and even money market accounts, it's declined significantly over the past couple of years, and it's likely to continue to go down this year. Therefore, you can't fall asleep at the switch. You've got to make 3 changes, or at least consider these 3 things to optimize what you're getting paid on your cash. Got that and more coming up. How much are you getting paid on your cash? What interest rate are you earning on your cash reserves? Maybe you're saving up for a new vehicle, saving up for a down payment on a house, saving up maybe for any other purpose. Are you getting a competitive interest rate? It's harder to do. Over the past couple of years, we've seen interest rates that you earn on your savings account or earn on your cash go down significantly, and the expectation is that's going to decline even further this year. As the Federal Reserve makes changes to their interest rate, that's the Fed funds rate, that's the overnight borrowing rate. That's supposed to be in parity with inflation. It hasn't been, and I'm not going to get into that, but it's been very different both on the way up and now on the way down. And yet when they do reduce the Fed funds rate, we're going to see, you've seen the savings account interest rate go down immediately. I tend to get the email or get a notice within the week of the Fed saying we're lowering interest rates. My bank account sends me an email saying we've adjusted the rate. And that's if they're kind. Oftentimes they don't even tell you. And yet what makes it so frustrating is that, borrowing rates, so mortgage rates or car loan rates, those don't go down right away, right? Those are a little bit more stubborn, takes a lot more time. So right now, and we've been in this season for a couple of years, you've got to be actively managing your cash. If you take your eye off the ball, then all of a sudden you can go from earning a competitive interest rate to not even keeping up with inflation. We, barely are right now. And that can mean significantly less interest earned and less cash in your pocket. So right now, what are 3 adjustments that you need to consider making with your cash to optimize what you're getting paid on it? First, you've got to make sure that your cash is in a high yield money market account. A high yield money market account. There's 2 different types of money markets, okay? There's a money market fund. That's a mutual fund that is typically not FDIC insured. You want to know what's inside that fund. There's a money market fund and there's a money market account. Money market accounts are offered by banks. They should be FDIC insured. One of my rules for your emergency fund, your cash reserve, it needs to be FDIC insured, because if it's an emergency fund, or just cash on hand, you are relying on that money to be there when you need it. And if you happen to need it at a time the economy is going through a financial crisis, you don't want to have doubts. Therefore, knowing that it's FDIC insured is critical. So first, you got to have that cash in a high yield money market account, but then connected to that, you might need to be shopping that high yield money market account. Not all of them are equal. It's just meeting with a client who over the years, he's just had 2 of them that he likes, okay? And he's had a little bit of money here and a little bit of money there. He's had about $100,000 in his emergency fund, cash reserves. It's both emergency fund, but also future spending. We call that delayed spending. And he split it between these 2. Guys, one of them is still paying around 3.5%. The other one, 0.3%. Not 0.3, and that converts to 3%. No, 0.3%. Not all money markets are equal. This is a business decision by that bank. They might say, we're not gonna play that game anymore. We're not gonna keep up with current interest rates. We're not gonna try and attract new dollars, and we're just gonna pay our existing money markets a lot less. And if people leave, that's fine. We don't want to be in that space anymore. You need to be aware of it. Now, for me, I've been using the same high yield money market account it's the one I saved up for my wife's engagement ring back, and we've been married, it'll be 20 years here coming up. And I know this money market, they were first to the game. They were the first ones, the pioneers, and they always pay a little bit less than the absolute maximum. But I know that they do keep in step with changes in the market. They just tend to pay about 0.25% less than the highest payers. Right now, you should be getting around 3.5%. Somewhere between 3.5 and 4, maybe 3.25. And if your high yield money market is not paying that, you might need to shop it around. I know it can be inconvenient to make a change, but now is, again, not a time to be idle. You want to make sure, check that interest rate for your cash. Make sure you've got a high yield money market account that is paying a competitive interest rate. Second, if we are in a declining rate environment, you may want to consider using some or all of your cash in a CD. Now, this is already assuming that you've said this is short-term money and we need it at just out of arm's length. Like, this is not money that we should be investing for the long term. It's short term because I need it in an emergency, or we need it when we buy the next car, or like there's a purpose for those dollars. If there isn't and it's long-term money, I'd consider investing it. I'll get to that here in just a second. But if you know it's short term, typically that rules out a CD because CDs have a certain term and there can be penalties if you reach in there. Well, we're in an environment where interest rates are declining, and therefore your money market interest rate is likely to decline quicker. If you can lock in a competitive CD right now, it may be worth it. Not for everyone, it may be worth it. Right now in our area, there's some CD specials. Normal CDs, they're just not paying anything. It's got to be a CD special. If you find a CD special that's still, above 4%, and your money market, at your bank is paying 3.25 or 3.5, might be worth it. Depending on your situation, looking at locking up an interest rate while we're in this declining rate environment can earn you an extra % or so on that money over a year's time. And then the third consideration, and again, this is when you've already known that this is short-term money, I might need it in the short term, so I don't want to invest it. There are hedges right now, and I use that term a lot, and I get a lot of people that say, well, specifically, what do you mean? You got to work with your CFP, because I don't want to give you specific advice when I don't know your specific situation. But there are hedging instruments now, very creative. A lot of enhancements have come to this space over the past few years, where you can actually get upside potential of the market up to a pretty low cap, and not have the fluctuation, the volatility on the downside. And it's, there's risk involved. So this is taking a step off of FDIC insured. I want to be very clear about that. But for some of your cash, this may make sense, where maybe the upside limit, you'll participate in the market up to 5.5%, 6%. So more than what you'd get in interest, and you'd be protected against downturns in the market. If the market does see a downturn, you would have been better off earning your 3.5% in the money market, because in this you would have been out, fees, and you would have had no return. But on the upside, you can have more return. You may want to consider that for some of your cash, but again, you've got to work with your certified financial planner. Optimizing your cash, present financial position, but knowing what to do, that's looking at all 6 areas of your financial life, not just your present financial position, which is the first area of everyone's financial life. Work with your certified financial planner on that to optimize what you're getting paid on your cash in this unique environment. If you don't have a CFP on your team, you can contact one of my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.